Welcome to Buy, Hold, Sell. My name is Vishal Tekshanani, and today we're building a winning portfolio of listed investment products. Like an elite sports team, a strong portfolio needs the right players. You need some income, you need some defense, you need some steady hands to steer the ship. That's why I'm joined by Adam Dawes from Shaw and Partners and Charlie Viola from Viola Private Wealth. These expert selectors are going to run the ruler over a couple of ETFs and LICs that I've picked, plus they're bringing their own. Together, we're going to find the Ricky Pontings and Emma Mackions of the ASX, picking the products that bring the best of offense, defense, and diversification for your portfolio. Okay, so let's come in hot here. We're going to go for a growth strategy, IVV, the iShares S&P 500 ETF. American exceptionalism in 4 basis points. Buy, hold, sell.
Well, when you actually first sent this to me and asked me about, 6 weeks ago, I had actually written down hold, but I'm changing my mind. I'm now a buy after the weakness that we've seen and markets selling off, and I think we're now technically in correction mode. It's a great stock to buy as a means of getting a really good broad-based exposure to markets. So I'm absolutely a buy.
Are you a buy as well, Adam? It is the number 1 pick by Livewire readers for 2025.
Well, and so it should be. The performance over the last 2 years, or last couple of years, has been absolutely fantastic. IVV, very, very good. S&P 500. Obviously, we've seen a lot of that Magnificent Seven, and a lot of that growth that's been in the sort of the top 7 stocks. 50% of the performance has been in those top 7 stocks, which leaves 493 other stocks in the S&P 500 that haven't really performed or still need to perform. Definitely, I'm with Charlie. This is in correction territory now, and it's definitely a buy for me, IVV. One thing I would say to all of the people out there that are trading, potentially IVV, is that you don't buy it at 10 a.m. Australian time. You buy it around 2 o'clock, 2:30 in the afternoon when the US futures have opened and we get a clear direction on what's happening with the US. A lot of people get caught up in IVV buying it on the early stages, and you're going to get whacked with the futures market. So wait until the afternoon before you pick up IVV.
Oh, solid tip there. Okay, let's move on to quality. And the next one is QUAL, the VanEck Miskey International Quality ETF, $7 billion in FUM. It is one of the largest smart beta funds around. Buy, hold, sell.
It's a buy. It is, to use the words of a learned colleague of mine, it is the one ETF to rule them all. It is the best quality ETF. It is an actively traded ETF. I've got a lot of money in this one. It's a buy from me.
Okay. The one ETF to rule them all, Charlie, that's a big call there. So this ETF seeks companies with high return on equity, stable earnings, low leverage. Now I ask myself the question, isn't that the job of an active manager? Buy, hold, sell.
Yeah, we're a buy as well. Adam's colleague showing his age there with the Highlander reference, I think. But yeah, we really like this. I think we probably have this in 85% of our client portfolios. We like the underlying assets. We like the fact that it's searching out for good earnings. It's just fundamentally good businesses. And then obviously it's still a good broad-based exposure. And as we say, it's reasonably cheap. It's a great one to stick in the portfolio, stick it in the bottom drawer and just hang on to it. So yeah, we're a buy.
Okay. Next one is within the income category. I'm really excited about this because we haven't had the chance to discuss private credit on buy, hold, sell. MXT, Metrics Master Income Trust, currently trading at a slight premium to NTA. Buy, hold, sell.
Yeah, we're a hold on this one. We do have this in our portfolios. We do like the private debt, private credit space. Metrics have done a good job over a long period of time. But risks are certainly starting to increase in that private debt, private credit space. There is more and more demand for non-bank lending. And I'm not suggesting that MXT do it, but in the space generally, what can only happen when you have more and more demand for non-bank lending is that some of the rules and some of the protocols maybe just drop down just a little bit. But we like the space. We still think it's a good way to generate revenue in portfolios. We're a hold.
Okay. Now, Adam, credit where private credit is due. I've looked at this fund's performance. It has never had a negative monthly return. Buy, hold, sell.
Look, it's a hold with me as well. I'm agreeing with Charlie that this one is looking a little bit stretched. There's lots of private credit out there. There is a bit of talk that the private credit market has to pay up and in fact pay overs to get deals because there's so much competition now starting to come in. MXT does offer a really good liquidity. It also offers some fantastic income. It pays monthly income to clients. And so that does gravitate for us to go for a client that has a medium risk profile, not a low risk profile, a medium risk profile. We've got a lot of money in it as well. It's a hold from me also.
Okay, we're going to switch gears into something defensive. The wicket keeper for your portfolio, gold, global X physical gold, stores bullion in the London Underground, management fee of 0.40% buy, hold, sell.
Look, the gold is a fantastic ETF and has been very, very successful for Global X and even ETF securities before that. I think 5% of any client's portfolio should be in gold. It is a great defensive asset, albeit now everyone's gravitating to it. Remember, 6 months, maybe even a year ago, everyone was worried that gold wasn't getting the attention because Bitcoin was getting the attention and a lot of flows were coming out of gold into Bitcoin. I think that's changed now. We've got lots of uncertainty around in the market. There's lots of fear in the market. And I think gold certainly should be something that clients should have in their portfolio.
Okay, Charlie, same question to you. 5-year annual return of over 12%, annualized that is. But as the question goes, is all that glitters gold, buy, hold, sell?
We're a sell now, actually, so it may actually have a little more to run. I do think it has probably acted as that sort of defensive backstop or as the wicket keeper, as you say, for a little while. But I think as rates start to come down, I think global growth will actually look okay over the next number of years. So we're probably a sell and to start to allocate to growth assets again, especially as we kind of move through this point where markets are correcting. And let's take that, let's dry up the powder, and then let's allocate it to growth assets.
Okay, this is a good segue into the next ETF. We're going to bring some spice to the portfolios. High conviction HYGG Hyperion Global Growth Companies ETF. The top active ETF by choice in our 2025 Outlook Series survey. Buy, hold, sell on Hyperion.
Yeah, we're a buy. So we like it. We like Hyperion. They've done a really good job over a long period of time. Proven manager, good underlying assets, still a good broad-based exposure to it, which is why we do the ETF thing, so we can kind of make sure that we're getting those broad-based exposures. We like it. We actually like the environment for the moment as well. We think that this sell-off is probably meaning that there is a little bit more value there for investors. So yeah, get in and buy it.
Adam, this fund has comfortably exceeded the benchmark returns of 20.09% per annum over the past 5 years. Buy, hold, sell on HYGG.
I'm glad, Charlie, we don't agree on everything. All right. So this one, I've got a lot of money into it. It's fantastic, and we've been a buyer for many, many years on this one. It's done us very, very well. My concern is at the moment that they have around 12% of their entire portfolio in Tesla. And I've been speaking to Jolan, who's the investment manager, and trying to get some clarity around that and what's happening with that Tesla. He's very, very comfortable, and he's a buyer of Tesla at these levels as it keeps continuing to come off. It just concerns me a little bit that there is it's a high exposure. It's his biggest part of the portfolio. It's a hold from me. I've been a buyer for many, many years. I'm just concerned about that large concentration, that over 10% weighting in the portfolio. And so it would be a buy, but it's a hold due to the fact that Tesla position. I just need to get some clarity around what's going on. I don't think anybody knows what's going to happen with Tesla at the moment.
Fair point. Now, our expert selectors, I did ask you to bring a couple of options. Adam, what have you got for me?
Yeah, so I brought two different ones. One, an income one, which is a PIMCO Global Bond Fund, PGBF. That's a fantastic one. PIMCO's got $100 trillion under management. It's a fantastic bond fund, and it provides that income. Then I've gone for the other side. I've gone for some growth. It's a dimensional DGSM, which is a dimensional small cap ETF. It's got 4,500 stocks. It's a global small cap. Something like that is going to do very, very well for your portfolio as well. So there's two choices from me today.
Beautiful. We got fixed income, we got small caps. Charlie, what have you brought me today?
Yeah, I've also brought you two. So in terms of the income stuff and the slightly more defensive, we like QRI, Qualitas Real Estate Income Fund. We like the manager, Qualitas. We like the manner in which they put the pools of loans together, small loans for small periods of time, low LVR, paying about 4 or 5 above cash, completely liquid, has tended to remain at the NAV the entire time. It had a little dip during COVID, but really that just provided people an opportunity to get in at a discount to its NAV. But yeah, we like it for the purposes of income. And we probably got it in most client portfolios. And then on the equities side, We like Aorus Global Fund, so BAOR is the unhedged version, DAOR is the hedged version. We're buying the hedged one at the moment, given where the dollar is. We really like Stephen Arnold and his team at Aorus. It is a good complementary exposure to our broad-based exposures and the really kind of mega cap tech-heavy exposures of the market. It is a very concentrated portfolio of really value stocks, I suppose. They just go out and find really good businesses that have got really good underlying earnings. So we like it, and we've tended to put it in most portfolios, and it's done exceptionally well over the last sort of 5 years or so.
Okay, wonderful. Gentlemen, thank you so much. If this was a cricket team, we've got something for all parts of the order. I hope you enjoyed that episode, and I hope you're able to take some of the best ideas that our advisors brought to lift your own batting average. My name is Vishal Texanani. Don't forget to like this video, subscribe to our channel so we can produce more content like this. Good luck with your investing strategy.